with mortgage meltdown, the last time around, what they found was that when the home value is depressed, when that home, if it went into foreclosure, or went into a short sale situation, then what happened is the first mortgage got all of their money. But the second mortgage, that second lien, the one behind the first mortgage, was left holding the bag. Was any real estate agents in here operating business during mortgage meltdown and had to work with any short sales? Did any of you negotiate that short sale second mortgage payment at $1,000? Lisa is shaking her head. That is what was going on, folks. During the mortgage meltdown, when homes went into foreclosure, let's say that the home sold for $1 million. Actually, it wasn't $1 million, it was more like $500 at that time. But if that home sold for $500, $500,000, and that and there was a first and second mortgage combination on there of say $600,000, and that's why it was called a short sale, right? Not because it was super fast and super quick. In fact, most of us in the industry made jokes about that. We'd be like, not a short sale, it's a long sale. Because the lenders at that time were not set up to deal with foreclosures and short sales. It was something brand new. Now they've got full-on departments to deal with it, because even though mortgage meltdown happened more than 10 years ago, the reality of it is the lenders recognized that there was a need. They opened those departments, they trained people in those departments, and they kept them running to mitigate loss and situations like that. And for almost all of us in this room, you know foreclosures and short sales are coming, right? Yeah. That is what's next on the list. And we'll have another class about all of that later. But as far as second mortgages go, when you are in a short sale setting, if we had that $500,000 sales price, but they really owe $600,000, the first mortgage, which was written at $400,000, would get all of their money. And then there was nothing left over, or very little left over for that second mortgage. So the second mortgage was generally the one holding the bag. And I was involved in many transactions where I'd see the contract come over and the negotiation was, give the first mortgage everything they want, the second mortgage, give them $1,000. And the second mortgage had to decide if they were going to allow the sale to happen or if they were not going to allow the sale to happen. And generally in those spaces, they allowed the sale to happen. And the reason why is because it's much easier for them to take the little bit that they can get and just move on with it than to let that homeowner stay in that home and fight with lawyers in order to try to extract more.